Hello everyone. This is the pre-market report video for today, 7th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. After a long time, last night US market had a very quiet day. Please look at the S&P 500 price movement. Throughout last night, on the top, it went 15 points positive, and on the negative side, it just down only 5 points. So today, the whole difference between the day's low and high was just 20 points, meaning it was very flat. But it doesn't mean US market was without events. Basically, positive news cancels the negative news. First, let's start with the negative news. Couple more FOMC members in their separate interviews echoed the same remarks as what Fed chairman said in the 60 Minutes TV interview. Basically, they also said inflation is still not contained and it's too early to start the interest rate cut. So this is clearly negative. However, on the positive side, for the third time in the last 365 days this year, London Stock Exchange Group increased the S&P 500 earnings. On January 1st, they said S&P 500 earnings expect to increase around 3%. Then a week ago, after some companies released their earnings, they increased the earnings expectation to around 6% compared to previous quarter. Now, more than 250 companies in S&P 500 released their earnings, and in that, over 80% of the companies' earnings did exceeded the analyst expectation. So again, now from that 6%, LSEG increased the earnings expectation to over 8%. Here, 8% earnings increase on the quarterly basis increase is massive even for the 50 company index like our Nifty, since that will reduce at least 1 to 2 index P ratio. This is strong fundamental, not this interest rate cut and its influence and inflation, etc. Market follow all those just to predict the influence of future earnings. Now the fundamental itself very strong. So this 8% increase quarterly basis is very much huge positive number, since the purpose of the stock listed companies is to earn more. However, because of this FOMC members' hawkish comment, US market closed only mild positive. Dow Jones increased by 0.37%, S&P 500 up by 0.23%, and Nasdaq was marginal positive 0.07%. Here, Nasdaq was mainly dragged by profit booking in semiconductor stocks. Then US VIX decreased over 4% and moved near 13 from above 13.5. About oil, last night US EIA released the short-term energy outlook, and in their report they mentioned because of the bad weather in US, last January the oil production as an average dropped 170,000 barrels per day, which subsequently resulted in increase of oil price by around 1%. At the time of this video, WTI crude trading at $73.5 per barrel and Brent crude trading near $79 per barrel. Coming to Indian ADR, apart from HDFC Bank, all others closed positive, more or less in line with the Indian market close. However, for the second day in a row, HDFC Bank increased over 1% despite it closed negative in Indian market. Here, I think there must be some investors who might held short positions in US, which they are now squaring off there every day, which haven't reflected on Indian market. Anyway, the takeaway is, on the top line, all 4 major Indian areas in US last night closed significantly positive. However, please be cautious, it might be just a lagging indicator to the Indian market, rather giving the clue for the future price movement. Then, in terms of GIFT Nifty, at 3 AM Indian Standard Time, it closed at 22,122. Here, I don't know, every other day, GIFT Nifty premium oscillates between this end to that end. On Friday, it was over 100 points. On Monday, it dropped to just 20 points. And again, yesterday, it increased to 80 points. Index being volatile is okay, but here, the premium for the future market is very volatile. That itself telling how much Indian stock market is without clear short-term trend. Again, it is what it is that we can't control, but we can interpret that. According to me, still we got 17 more trading sessions. So 80 points premium is very much reasonable for the future market. And this 22,122 today early morning close kind of indicating 80 to 120 points gap up opening. So that's the overall about the global market. Now let's move to the Indian market related info. First, as usual, let's have a quick recap. Even on last pre-market, I mentioned this. Yesterday's Indian market momentum expects to drive by Chinese market because day before yesterday, their market was the culprit who dragged us down. In line with that, early morning, Bloomberg released the report that top Chinese stock market regulators met the Chinese president and gave the debriefing about Monday China market collapse reason and what's their plan to stop these sudden sell-off kind of. We discussed this on Monday. Chinese small cap index dropped 6%. Then after this meeting increased 7%. Even their equivalent Nifty Shanghai Composite did increase over 3%. So Monday negativity turned into positive yesterday, which indeed supported our market. Hence, metal sector increased over 1.5%. In addition, IT and oil and gas increased over 3%, whereas banks and FMCG closed negative. Here, IT stocks were positive because of sudden increase of US service sector PMI, which we discussed in the last pre-market video. Since increase in US service sector directly will increase the IT company's revenue. Just for info, over 50% of TCS revenue comes from US and near 70% of Infosys revenue comes from US. So no wonder US service payment data did influence our Indian market. Then about oil and gas. Yesterday, India renewed the gas deal worth over 78 billion US dollars with Qatar. Under this new deal, India expect to save 0.8 US dollars per every million thermal unit of gas and the price is fixed as 12.67% of prevailing Brent crude oil prices plus some fixed component. So all gas related stocks including the distribution companies such as Mahanagar Gas, Gujarat Gas, etc. all rallied. Moving on about institutions. Yesterday both FII and DII were net buyers. FII net bought for 93 crore rupees whereas DII net bought for around 1100 crore rupees. Again trade volume is slight above but not like crazy high. Finally about earnings. From the top line financial perspective, Britannia's net profit down by 40%, which is clearly not good, and even their revenue, EBITDA and EBIT margin, none of the numbers were not good. So Britannia will be on focus today. As a summary, US market closed on the positive note despite the hawkish comment from the FOMC member. In line with that, GIFT Nifty and Indian ADR all indicating the positive opening. Here, one more thing. On Monday, Jio Financial increased 15% on the expectation of acquiring the Paytm customers. Now, yesterday, there was a further rumor that HDFC Bank is having the discussion kind of. Again, not sure about the impact, but better keep an eye for any confirmation. Then yesterday as per stock open interest, Aurobindo Pharma, Power Grid, BHEL, Marico, Axis Bank and Bajaj Finance got an increase in open interest with a negative close, indicates the short build up. On the other hand, SAIL, Bosch, ONGC, Biocon and Alchem Lab got an increase in open interest with a positive price close, indicating the long build up. About the things to look out, Power Grid, Nestle, Lupin, Manappuram Finance, Apollo Tyres and General Insurance are some of the major Indian companies' earnings results are scheduled released today. In terms of macro, during our market hours at 12:30 p.m., UK's housing inflation and Germany's industrial production data is scheduled to release. In the aftermarket hours for US, mainly government's 10-year note auction, then crude oil inventories report and finally some more FOMC members press conference are the important items we need to keep an eye out today. Coming to technical, Nifty opened above 21,800 and throughout the day with some minor profit booking, it kept on increasing and closed over 150 points positive. Thus, on the daily chart, it formed a bullish hammer candlestick pattern with substantial volume. The psychology behind this candle is, during the trading period, seller increased the selling pressure, but finally buyers took completely control over it. Clearly, it is a positive sign. However, it required the confirmation for the upward journey, like the next candle has to close above this hammer candle. In addition, both daily and hourly momentum indicator has a positive crossover, so suggesting towards continuation of the positive momentum. Hence, as long as Nifty trades above 21,730, we can expect it to continue towards 22,000 to 22,130 level. Then, in case of Bank Nifty, it also opened on a positive note, but in the end, it erased all its gain and closed 300 points lower. Thus, on the daily chart, it formed a bearish candlestick pattern with a lower shadow. The psychology behind this candle is more or less same as Nifty. Sell has increased the pressure, but unlike Nifty within the time frame, buyers can't able to take the control. And in the 5-hour chart, it forms a morning doji star pattern, which all indicating the indecisiveness. Because of the late hour recovery, we can say with a positive bias. Either way, there is a lack of a clear trend. Hence, we have to wait for the breakout to determine the market direction. On the downside, it's 45,500, while the immediate hurdle is at 46,000. A successful break above 46,000 might propel the Bank Nifty towards 46,500 on the upside. Regarding weekly options front, the maximum call option open interest was at 22,500 strike, followed by 23,000 and 22,600 strike, with meaningful new call option writing at 22,600 strike, then 22,500. Thus, from the options data, 22,500 is the immediate resistance. On the put front, the maximum open interest was at 21,000 strike, followed by 21,700 and 21,900, with new put option writing at 21,900 strike, then 21,800 and 21,700. Hence, the immediate support is at 21,900 and then at 21,700. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.